Hello, everyone. Paul Eisel here with REO Auction Academy. What we're going to do here today is go over some numbers of news in the business news as well as real estate news, right? It's all interrelated. What's going on affecting business right now is going to be going on affecting real estate 6 months down the road, if not sooner. I mean, this market here, we're probably going to see in the next 3 months, I would say, or so, as soon as they drop the moratorium on foreclosures. But the numbers are big, so I'm going to do a screen share here so we can take a look at those numbers. And here we go. I'm going to go straight down here. As of August 31st, 163,735 businesses have indicated that they are closed on Yelp. That's down from 180,000 that closed at the very beginning of the pandemic. However, but it's a 23% increase from the number of closures since mid-July. So again, we're going in the wrong direction here. This is something we definitely do not want to continue. All right, from there, we're going to go down to here where, in addition to monitoring the closed businesses, Yelp also looks into and takes into account what businesses are permanently closed, right, have become permanently closed. And that's steadily increased, as it says here, over the past 6 months, reaching now 97,966. That's 60% of the closed businesses won't be reopening. And that is a staggering number. So if you want to take that you don't want to take this fully across lines of businesses, but you probably can for the most part. It gives you at least for mom and pop size businesses here, restaurants, anything in the entertainment and dining industry. You see AMC cinemas, they've opened up and they have nobody coming right now. So people have learned, we've changed during this time. We're watching Netflix now. We're watching things differently. So we aren't wanting to go to the cinema. And unfortunately, when you have a lockdown for 6 months like we've had here, this is what's going to happen. Okay, and with that number in mind, you look at what the media is pushing. They're pushing, we're going to get back to normal. We're going to head back to a normal economy. Folks, guess what? We will never, ever be in a normal economy again. It will become a new normal, a different economy that we are heading in. We are heading into basically what is the equivalent of an industrial revolution. However, this is going to end up being a tech revolution because now, instead of having all kinds of growth in manufacturing and things like that, we're going to have growth in the tech industry, right? That's going to end up being a driver. Our banking system is going to change. We're going to head more to a crypto type environment, and that has good and bad effects with it. Okay, let's dive into the restaurant industry right now. We were speaking of that a little while ago. It looks like 40%, according to Fox News, 40% of all restaurants could go under within the next 6 months. That's kind of crazy, but it really shouldn't come as a surprise. The ones I think you'll see that stay around are your specialty shops, the ones that already had a lot of takeout and outside dining. Obviously, depending on what part of the country you're in, outside dining is not going to become a possibility. It's not going to be easy. You can put all the heaters and outside heaters you want, but when it gets below zero, nobody's going to want to be outside. So this is something that's obviously going to be ramping up as we now get into the colder months. Here we're at September 21st today. As we get in October, November, December, January, this is only going to continue to increase. And as you have that, right, so how many of those restaurant owners own homes, right? So now they're going to have to sell their homes. And if the values of the homes are falling, well, then they're going to have to sell it and pay money to close, or if they're underwater, or they're going to have to do a short sale, or it's going to end up being a foreclosure potential property. So what you're going to see is this is all leading up into 2021 being a year of great opportunity for real estate investors. All these numbers, you want to continue to look at these numbers because this is all going to affect you as a real estate investor. And another industry to look at here, obviously, is the airline industry. And the airline industry wants another bailout, right? They're asking the government for another bailout. They already did have one, and they're probably just about out of money if they're not fully out of money already. So they want another bailout. But you got to think about businesses, right? A lot of the real estate or the airline industry was dependent upon business travel, right? So now what you've had in this lockdown in the last 6 months is less business travel, more Zoom meetings, right? More meetings being done that way, less travel, less going from spot to spot. So if companies are learning how to do this, then there's going to be far less need for airlines, right? So you're going to see potentially consolidation of the airline industry. And again, less jobs. There's what, 19,000 jobs that were cut, I believe, by American, and others. United, I think another one was also cutting a bunch of jobs too. So this is coming up in the fall, around November timeframe. And, I just don't see this stopping from industry to industry. There's a study out there, 1 out of 4 malls will be out of business in the next 3 to 5 years. And this was already starting before, right? This was just pushed by the coronavirus. But this was already something that was going on here. And then if you look at the stimulus, right? Trump wants to make another round of $1,200 stimulus checks. Yeah, that may pay 1 month's mortgage or 1 month's rent, but we've already had people 3, 4, 5, 6 months behind in their payments right now. And you can only kick the can down the road so long. Now let's take a look at an article here from Market Watch here, talking about how the COVID-19 lockdown is squeezing real estate from all sides and threatens to burst a housing and mortgage bubble. Right. Well, mortgages are doing fairly well right now. The number of people basically refinancing is probably at or near record highs at most times here, just because the rates have dropped and continue to drop, which has been tremendous, including me. I'm refinancing my property as we speak. But what I'm seeing too, they've also increased the fees on the refinances, so that's hitting us pretty good. But we also basically they're changing the restrictions on what you need to qualify for the refinance. So they're making it more difficult for you to refinance. So this is, and it's taken longer, right? We were supposed to be refinanced here in January or September the 4th. Here we are, September 21st. We're still probably several weeks away from being able to do the refi. The underwriting is so far behind. Everybody's continuing to be so far behind. Now we're going to get into the numbers here. And this is an FHA number right here, but 17% of 8 million insured mortgages are now delinquent, meaning FHA, VA mortgages, and probably the farmer's home as well. The hardest hit, New York City, obviously, Miami at 24.4 and Atlanta at 21%. All these markets or cities that are in turmoil, not just from the coronavirus, but also from lockdowns, restrictions. People just went out. They want to get away to more rural areas where have more freedoms and ability to do things, and they have less rioting going on as well. Recent reports show that the prices, I think the median price of real estate increased to $295,000 year over year. So it's really increased. We're getting close to that $300,000 threshold. However, we're seeing signs that this is starting to stop and change. When you read right here, a telling figure in the percentage of home sellers who had to drop their asking price in August. San Francisco showed the highest percentage at 24.5%, but other major cities, including Chicago, Philadelphia, and New York, also saw increased percentage of reduced listing prices. Starting to see that. I'm not seeing it here in the suburbs, got to say, but this is definitely something that's starting in the city, and it is a city trend that will come out to the suburbs as well. Denver, which really has been the hottest market in the country since, I want to say, 2010. So many people from California moved to Denver area, and it continues to grow and grow and grow. But in August, 41% of home sellers had to reduce their asking price. Now, they were probably used to increasing over the past 8 years or so. So now this is the first time they're having to decrease it. You got a couple things going on in Denver. One, you have decreased demand. Obviously, it's an urban area, and you have rioting and things going on there as well. So you do have that decrease going along, and Tampa, Florida is even starting to feel that decrease as well. So the market is starting to cool off. We're seeing that, and this is something to really keep in mind when it comes to next year. Because, in 2021, prices you should see drop, and you should see inventory increasing. Some other disturbing news that's out there, and this is according to online apartment broker Apartment List publishes a monthly survey of 4,000 renters and homeowners. I don't know what the mix is here. They don't really get into that, but in August, they found that 33% of those surveyed have been unable to make a full rent or mortgage payment for the first week of August. That was up from 21% in April. So you see, we're heading in the wrong direction there. So it's basically you're at 1/3 of households right now for those that are in this. And that's a combination of renters and homeowners as well. All right, now you're going to get into the part where I preach, because if you know me, I'm very libertarian and I hate the government being involved in nearly anything. What they've done here by extending the moratorium to the end of 2020, what they've done is basically build a dam. If you want to look at it, a dam was being built. Water was going, it was trickling down. Now you build a dam and it's getting hot. The water level is getting higher and higher and higher and higher, right? It's going to get to the point where that dam bursts and now the market is flooded, right? You just got to look at it that way. There's a visualization to use here because it's what's going to happen. How long are they going to kick it down the road? They've already kicked it down again to the end of the year here. It's not all mortgages, but it's insured mortgages here, which meaning FHA, VA, and a farmer's home, and it could be some Fannies and Freddies in that as well. But by doing that, all they've done is guaranteed that the collapse is going to be far worse than it would have been if they just let things happen, okay? And that gets me into a whole other thing about people talking about socialism stuff. This is socialism, okay? This is what governments do. They get in the way, they control things, okay? If you let a free market, a capitalism do what it does, you wouldn't have this kind of garbage happen. This is how governments get in the way and do nothing but cause problems and make bad situations 100 times worse, right? And make people suffer 10 times more because these people think they know better than us. And you know what? We're getting sick of them. I'm sure most people are getting sick of them. That's why people are moving the hell out of this stupid state, California. Why anybody would move in California? Why anybody would want to live in New York? I have no idea why anybody would want to live in New Jersey. I live in Pennsylvania, which, you know, used to be a very red state. Now we have a complete idiot at governor who is screwing things up for us, had lockdowns, major lockdowns, way too long. We didn't have that many cases and said we're going to have so many businesses going out of business. That's going to affect everything, real estate, everything down the road. Okay. So this is exactly why you do not want government interfering. Unfortunately, they will interfere. The more power you give them, the more morons you vote for that do this kind of thing. If you're not getting those people that have been in office for a long time out, then this is what we're going to get, unfortunately. All right, let's get into how it's going to affect your rentals right now. And I'm in a pretty good position. I have 10 rentals right now. I've gotten rid of a couple here very recently. I'm looking to get rid of potentially more. I'm going to keep a few of them, the ones I really like, and I've been fortunate. I've had everybody paying. I do have one that's been straggling behind, but they were straggling behind before Corona. They continue to pay. They're trying to play catch up here. And they've been very good over the years. They just had a situation where both of them lost their job at the same time, and I'm trying to work with them here, waive fees, all that kind of stuff. But where it talks about here is small landlords have been devastated by the lockdowns, which is true. And I know a lot of guys, good friends of mine that own apartment complexes, and they are getting hammered right now too. They're getting hit pretty solid. They're still cash flowing them, don't get me wrong. And some of them are getting hit worse than others, depending on where the location is. But this is something that's going to continue. It's going to continue to get worse before it gets better, right? Because unemployment has been slow. From what I hear, they've been very slow to pay people. So if they're behind, then your tenants are behind. They're not able to keep up with rent, and they're trying to get any kind of little job they can. And of course, we know the unemployment numbers are completely cooked. The books are cooked on those. The government puts out all kinds of garbage. We know there's over 30 million people unemployed, really potentially over 40 million that are really unemployed because they count people that work for Uber for one or Lyft one day as employed. So we're in a situation that's just different than normal markets. But this is affecting landlords. It's affecting smaller landlords. It's going to affect everybody down the road here. And pricing is definitely going to take a hit. So just be prepared for that and be ready to take advantage of it when it does. All right, now to review everything here. Bottom line is the markets are beyond their peak. They're now starting to decrease in major cities, right? You're going to start to see that trickle down into the suburbs. But for right now, everybody's moving from the cities, the mass exodus from the cities to the suburbs and to rural areas. I'm continuing to buy properties in rural areas and will continue because they'll be affected the latest. So it'll give me more time. Plus I'm buying them at deep discounts because I don't have a whole lot of competition out there, and I'm going to continue to do that. And I can get rid of them using several different methods, whether I use owner finance, do them as rentals, fix and flip, or wholesale. I love the wholesale model, doing that on quite a few of them right now. But basically what we're looking at, pricing right now at its peak and dropping. So that's what you're going to look at. Inventory right now at a record low. I do see that increasing, but not till next year, not till 2021. As soon as they drop this moratorium here, or as soon as the stock market goes more into turmoil, more jobs are lost, then you're going to see real estate, as far as inventory levels, go up, because you're going to have people that need to sell their house. They need to sell it because they need to pay bills and pay off things that they need to try to get their equity out of there, right? So if you all of a sudden have a bunch of people doing it at a similar time point, you're going to have an increased inventory, you're going to have decreased prices on it, and you're going to have opportunities to get decent deals there. So be ready for that. But I would recommend, even, if you get great deals, that's great. But otherwise, wait until the inventory really ramps up next year to really start increasing what you're doing. So you're going to want to do this, basically start small. It's great if you want to jump into real estate now, because now is the perfect time to learn. Start small, work your way up, getting more and more deals. As the inventory increases more and more, you're going to find deals out the wazoo. Opportunities coming. It's going to be a huge wealth transfer. Just want you guys to be ready for it. And you can learn about it here at REO Auction Academy. If not with us, reach out to somebody else who you know is in the industry, get some mentorship, learn how to do this business the right way. And really, you're going to have a great future here over the next 5 years in real estate. And whatever you can buy and hold would be excellent, but it's going to be hard to find a credit, because as the markets turn like that, the credit dries up. So it's going to be much more difficult for you to fund these deals. So find your private money. Find any kind of resources you can use, whether it's home equity line of credit, or even using life insurance policy like I do, or using, sell off stocks, sell off what you have in the market while the market's still high. It's September 21st and the market's down like 510 points today. Had a big drop, recovered a little bit because it was down close to 900 earlier today. But I think we're starting to see the market really get a little bit of a hit here, and the amount of unemployment, the job situation starting to catch up with the market, and the rates not being lowered by the Federal Reserve. So that's all taking its toll and decrease the market. But just be ready for next year to jump in and be able to really, really create some long-term wealth. Good luck, guys.